Good afternoon, everyone, and welcome to Stock Market Today for Friday, February 14th. It's Alyssa Coram here, and stocks are at a very pivotal juncture here with Thursday's strength, and now we have the major indexes very close to all-time highs. And joining me now to discuss the approach for active traders in light of this week's action is my colleague, Mike Webster. Mike, great to see you.
Hey, happy Valentine's Day to you and to everyone out there.
Yeah, and happy birthday to my brother. And my
Oh, wow.
mom's birthday was yesterday, so fun
Wow,
time of
happy birthday to
celebration.
the fam. That's pretty cool. Is that
Yeah,
the chiropractor?
yep,
Awesome.
yeah.
Very cool.
All right. Well, we've got a lot to get to today, so we'll get right to it and jump right in, starting with a high-level look at the major indexes. The Nasdaq, the only one in the green on Friday, up about 0.4%, closing back above that 20,000 level. Meanwhile, the S&P 500 essentially flat on the day, just ever so slightly lower. The Dow on Friday down about 0.4% here, and the Russell 2000 small cap 0 RUS in market surge continuing to look weak here, hitting resistance once again at the declining 50-day line. But Webby, I know you've been keeping a very close watch on those prior highs from the December timeframe, wanting us to get above that level, and we did that this week.
Yeah, that was the most important thing today. Boy, there's so much has happened recently. So this week, we had a ton of news and a ton of reasons where the market could have fallen apart. So let's kind of go back to last Friday. Last Friday, early in the session, half an hour in, we've got some inflation data that was, out of University of Michigan that could have really thrown the market for a loop, and that could have been enough of a reason for us to really kind of be down back at the lows today, because we had Powell speaking in front of the Senate and Congress 2 days this week for his for those hearings. They used to be called the old Humphrey Hawkins hearings, and now they've changed the name. But anyways, it's those can be really market moving times. Most of the time, it's just bunch of politicians just trying to get their little soundbite out there. But every once in a while, Powell will take that, or whoever is in charge of the Fed will take that opportunity to really kind of drop some news. But that didn't happen this week, so it was really what wasn't said, because he could have pointed to that on Friday, said that we're very concerned, about inflation expectations. But he didn't. He chose not to. And then there was CPI and PPI that came out this week, and there was reasons why the market could have sold off, but we got support, as you're pointing out, right at 6,000 or 600 on SPY, 6,000 on the S&P, and more importantly, right there at the 50-day, and closed back above the 21-day. So it was a huge test this week, and if you recall, this started on December 18th with that really bad break in the market, and we've just been digesting all of this news, and we have AI.
And that was Fed induced, that December 18th.
That was Fed, yeah. That was all because of how Powell came out during that press conference, really, on December 18th. So he's had another press conference he's been in front of Congress, in front of Senate. We've got numbers out. We had the AI event happen. We've had lots of tariff and other related news items out of DC, all of which, if the market wanted to fall apart, it had every reason, tons of reasons, but it's not falling apart. And more importantly, today, look at this massive spread we had today.
Yeah, we held real tight, actually, after Thursday's significant move above a trend line here, closing above those December highs. And so we're getting really close to new high ground, Webby.
Yeah. So when you're when you have a tight spread, I always interpret that as equilibrium, meaning the bulls and the bears, there's not new price discovery, and they're just comfortable at that level. So what's going on? We had a lot of news behind us. We have a 3-day weekend that is U.S. centric. So meaning, the foreign markets are going to be open on Monday, which means we will play catch up. But what a lot of people don't realize is it is really a global market. And even though we're kind of the dominant force, we're going to talk about China a little bit later, and China has been moving. And so when you have the rest of the world open and we're not, that means that on that following Tuesday, you have a lot of gap potential, gap up or gap down. With that, we held in tight. So hopefully it means that we gap up into new highs and don't look back, because this is how a setup looks like before you launch into a new move higher. And what I would suggest people do over the weekend is go back, you can use the NASDAQ, you can use the S&P, you can use whatever you want, just any major index, and look at the times where those marked highs and lows, like, so in this case is 6,099 and then your 5,773. When you have those like that, and of course we went a little bit higher, but really you didn't make real progress. Look at times where you've digested, so really an intermediate correction or a pause in the market. And then how did it look like when it went higher? The same way we interpret individual stocks breaking out of bases, whether it's a cup with handle or an ascending base, flat base, anything in between. This is really kind of a flat base with a little kind of flatter base next to it, or a shelf next to it. Lots of ways that you can interpret it, a cup with high handle. So just look at them historically, and this is what they look like before they move higher. So we want to know what's normal and natural, and what's normal and natural would be another leg higher. Now, what do we look for clues if that's not going to happen? Where are those key levels? Well, yesterday's low would be the first line there, because with a big move like that, closing at the highs and then holding in tight going into a 3-day weekend, it's a real statement by the bulls and the bears. The bears have paused. So if I was a bear, that's where I'm going to want to push it to kind of break this chart. But right now, looks really good. And it's kind of nice that it was a nothing burger of a day, point down 0.01%. So that's just giving all the stocks a chance to digest.
Absolutely. And so, it does seem like, given the resilience and the strong action on Thursday, those were really the days to be adding back exposure after maybe scaling back over the prior couple of weeks, Webby. And it seems like we are in a strong position if we continue to see strength next week. But there are some pretty clear levels to back away.
Yeah, from a swing trading standpoint, we started hitting it pretty hard on Wednesday because things were firming up at key levels, and so we had dialed things back. But because things were firming up, we really started, kind of ramping exposure. And as we talked about on IBD Live this morning, that a lot of that was done via ETFs, because when you get a market turn like that and you don't have a lot of stocks in position to be bought, a strategy I've used for a few decades is to start off with the ETFs and get your exposure level up to whatever your target is. And if you don't have a target, that's fine. That's how you start off trading. You're just trying to pick stocks and cut your losses, let your winners run and all that stuff. But then once you get to the next level, it's interpreting the market, what the indices are doing, how you're doing, how individual stocks are doing, how groups are doing, news flow, all of these things into kind of a mosaic, and saying, okay, this is how deep in the market I want to be at a max. And then you do everything then is boiled around that number. So in my case, I wanted to be 100, for a swing trader, like 105 to 115%, give or take. So that meant to ramp that up from being very light in the market. The easiest way to do that was through ETFs. ARK was one of the ones that we started and added to, and I have that in my own account as well. And, we did it with the Qs and SPYs, and I have those in my accounts, my own accounts as well. And so this was really nice action, and I think a way to get heat is through ARC, because a lot of the individual stocks that she trades, Kathy Woods, trades, they're a little too high octane for most people to trade individually, including myself. And so getting exposure in a nice basket,
Right.
and she has a lot of funds. I've got some investments in all of her different ETFs, and it's worth looking into. The
Mhm.
ARC-F and the K and the X and all of that. But yeah, so it's a nice way to get some heat exposure, and the Qs is kind of the easiest way to do it, right? Because it's super liquid. You can understand what the stocks are. It broke that downtrend on there. You can do a double with the QLD, you can do a triple with the TQQ, or you can just keep it simple with the QQQ. And I do a little bit of each depending on the account. But that looks like it it wants to break out.
Yeah. Looking strong there. Okay. And any quick thoughts on the NASDAQ? Similar action where, there's the 50-day line at Thursday's low. We've got some recent highs that we're getting very close to. So, your thoughts on how to interpret Tuesday's action with these levels in mind?
Yeah, so it's going to be a long weekend in a lot of ways, because when you're up at the top of a range, right, you could easily just roll back down. And like we said, our line in the sand there is really yesterday's low, as you have marked there. But it could just not be ready yet for whatever news flow happens over the next 3 days. Could just say, the market's not ready and needs to come in. No harm, no foul. You back away from your positions if you're, an aggressive, active trader. But really, you're looking for a gap up, a gap up that doesn't look back. And what happens lots of times where, and why I like to get positioned as it's setting up, because this looks like what I would call a setup day. Like today's action, a tiny little spread closing near the highs is just something that I've defined and coined as a setup day, because it's setting up to break out. Doesn't mean it has to, because we don't have a crystal ball into the future, but that's what they look like before they go up. But it also looked very much like this the last time we were up there at the last marked high, the 20,118. Wasn't as tight of a day, but it was a setup day, and that was a Thursday going into that Friday with that downside reversal.
Mhm.
And what was also nice about today was we broke those trends. We had three Fridays in a row where we were selling off going into the weekend. So now we have a 3-day weekend, and instead of selling off, they close them at the highs with a tiny little spread. I mean, that is just poised and set up to go. I know it's always better to be cautious, and it's better to be negative, and people, like it sounds smarter, to always be a worry wart, but you should be a worry wart when you have something to worry about. This is a
That's
setup,
good.
and if it fails, it fails. But
Right.
this is how they look before
Yeah.
they launch.
All right. Good stuff. I think now we're going to go to our ETF section. We already talked about ARC, and I know you like starting with the weakest
I do, and once you run
first.
through them, if I have something to say, I'll say it. Otherwise, we'll be here all day.
All right. GLD, gold, a lot of recent strength, obviously, but a number of the stocks, most of them, I mean, all the leaders are extended. So we need to wait for new setups there. XLV, this is healthcare continuing to weaken. So, not my favorite spot to be looking. Consumer staples have been on the rise over the last couple of weeks. So, along with gold, a little bit of that uncertainty kind of vibe out there. Even the growth stocks and the high octane kind of stuff also working. So that's kind of an interesting mix. Utilities, this is, I would say, just kind of market performing right now. It doesn't seem like we're really focused on any of those AI utility names again just yet. They're still in repair mode and not, a lot of compelling setups there just yet.
I
And if,
totally agree. I would still be cautious with them.
yeah,
Frankly, there are a lot of it. Let's pull up GEV, which is kind of the poster child for those. It's just a lot of them look like this. Or let's go to VST. I think that one was looking a little bit better. Now they all kind of look like this. They just need time, but it's
Mhm.
good that they've been tightening up. But I would still be very
Yeah,
leery of that trade until we have more time.
right. Okay, so XLRE real estate kind of trying to make a move, but this doesn't look like a very compelling area to me. Materials market performing as of late doesn't also seem like the standout area at this time. Industrials weakening, but it wouldn't take much, I think, to for some of these names potentially to start looking compelling here. XRT, this is retail continuing to weaken, at least from a broad perspective there. RSP, we didn't talk about this in our market section. Webby, an updated take from you on the average stock out there.
Mixed, because nice little cup with handle here, lows back above the 21-day, but you close down on the day with a little mini downside reversal. So as much as it's good, it's bad as well, which just means you just need something to break the tie. So breaking the tie would be
Mhm.
obviously going over the 183.23, the cup with handle, or the handle portion,
Mhm.
but even just taking out today's high would be
Yeah.
good enough to just say, okay, all things are good. Being objective about it, even though I'm very bullish based on the setup, looking at this by itself feels like it needs to take out Wednesday's low. Like they would want to test that. But the right, it may or may not do that. But just putting in a nice isolating this feels
Mhm.
like that would be normal and natural.
Yeah. Obviously, we love it when the wind is at our back and a lot of stocks are working, but luckily for us as stock pickers, we can, sort of find those diamonds in the rough even if the average stock out there isn't looking stellar.
Yep.
All right, here's a look at consumer discretionary. So you've got Tesla and Amazon in this one, and some weakening here. Although I think this is another area where it wouldn't take a lot for this to get back on its feet.
Yeah,
Here,
I mean, I
go
would
ahead.
say that, the Tesla, I had a
Mhm.
long-term position in that, and using my rules, I had to exit that, 2/3 of it last Friday, and then the balance of it, today, because that RS line went through
Yeah.
those moving averages. I still have some remnants in it, some options that are probably going to go worthless, but it was good that it had an upside reversal, but it's in no man's land.
Hmm.
This one is, Musk is really, I think, getting hit with all the news as he's linked himself to the White House, and so I think that's causing some problems for the stock. So how you would trade it is really look at this as a double bottom with a 439.74 as your standard pivot, or if you were going to do a shakeout plus 5 to 10%, which would be you would add 5 to 10% on to that 373.04. That's the old Jesse Livermore shakeout plus three, which would get you in just shy of 400. But right now it's in no man's land, no reason to really trade it,
Hmm.
frankly. And
Yeah.
then Amazon, the other one that's big in that group, looks really
Yeah.
good, holding nicely at the 50-day. So
Mhm.
I'm looking to get into that if it takes out that the 21-day.
Yeah, I'm right there with you. Okay, so those are to look at the big holdings in XLY. Then we'll go to IGV. I think software continues to be an area of strength. I feel like all the leaders are kind of up and out of there, though. But maybe there are some others that are starting to join the party. QQQE. This is the equal weighted Nasdaq 100. What are you seeing here, Webby?
Yeah, so we added this in the mix, and I would like RSP to look like this, but RSP doesn't. So it is what it is. Like, this is nice to see that leading into new highs. I mean, really, this is your average Nasdaq 100 stock. So it's telling you those are healthy, and it's leading the market cap weighted Q. So
Yeah.
that's a healthy. I prefer RSP, frankly, for a measure of breadth, because it's more broad based, but because it's 500 stocks and it's not just tech. But if you're from a tech standpoint, it looks
Yeah.
really good.
Yeah. I like it. Okay, here's a look at financials pausing near recent highs. So perhaps some follow on entries for some of the stronger names in the group are brewing.
That group looks really good. It was a little whipsaw this week, and I eliminated my exposure there, and really am looking to get back in. I would
Mhm.
spend the most amount of time in that space.
Yeah.
Like
Okay.
Goldman, Morgan, JP Morgan, all those look good.
Yeah. Okay, next on our list, let's go to the chips. Also in repair mode here, but this is pretty wedgy action here after that bad break.
Are you a fan of John Mayer and Continuum? Because you keep on saying "In Repair," and it's probably the best song on that album that no one ever listens to. This has got a lot more to repair. Let's
Yeah.
go to Nvidia, which is the poster child here.
Mhm.
Yes, I know it's back above the 50-day and everything, but again, it
Mhm.
needs time to
Yep.
heal this breakdown. And you can see, try to hit 152.89, got turned away. Then it went up 153.13, got turned away. Then got turned away at 148. Then you had your gap down. Now it's coming up. What's good about it is that it was able to make it through there, where this is a classic place where people would have
Right.
shorted it and pushed it down back through the 50-day. But I would stay away from this from any short-term trading standpoint.
Mhm.
And the chips in general are just they need to settle down and tighten up.
Mhm.
It feels very wedgy, really.
Yeah, I'm with you. Okay, and here's another look at technology with XLK. Also showing some relative strength lately. So we've talked a lot about tech sector names and that being an area. Energy, this does not look like an area of strength. Of course, we know with this XLE ETF, two big weightings are Chevron and Exxon. But even still, it just seems like there's a lot of noise out there right now for that sector. And then the Qs looking strong. We looked at QQ, QE, and then FNGS. Here's another take on tech, but really just looking at the mega caps, FNGS. This is pretty strong here. Thursday breaking out and relative strength continuing higher.
Yeah, and I do have positions in this in my personal with the FNGU, which is the 3x, and then we have the FNGG, which is the 2x on Swing Trader. And this is one of the reasons why I'm so bullish right now is having those. And if you look at it, it's only 10 of the mega caps, and lots of them don't look that good individually. But when you put them all together and you're breaking out to new
Mhm.
highs, if the ones that are looking weak can firm up even more, this could have another leg higher. And it's pretty much been the place over the last couple of years to be where in those mega caps. So, and you
Yeah.
were bringing up the IWM earlier and how weak that looks. I mean, that game hasn't changed where selling the small caps is anytime that they look good for 5 minutes, they
Yeah.
get sold, and then that money just keeps on flowing into the mega caps. It is
Mhm.
what it is.
Yeah. Okay, and then here's XLC. You have Google and Meta. I mean, Meta, I think it did end up breaking a record today for most number of up days in a row in the S&P 500's history with 20 up days in a row after before it broke out, but really, I mean,
Doc,
there was a
dude.
time to buy it kind of close to earnings, so that was the tricky part of it. But look at that, 20 up days for this mega cap.
Yeah, Zuck, I know that your stock has been up every day. I'm on air. I can't talk. Yes, congrats. Okay. That guy, man, he just look, Zuckerberg has done a good pivot for his company recently. Anyone who, watched the Joe Rogan episode, you could see the clear pivot that he's made. He's all about making sure that his stock is as high priced as possible. And he does a great job of that. And, you can't argue with all those days
Mm,
up in a row. It's clear that people, the big institutions, this isn't,
yeah.
your Aunt Sally down the street. This is your big institutions making a shift and saying that, this is where they want
Mm,
their money. Well, let's look at Google, which is in the same
right.
space as far as in the XLC.
Looking
And
weaker.
yeah, they're getting weaker, and
Mm,
as far as the mega caps, let's also look at Microsoft. And you want to put yourself in the shoes of a big institutional fund manager, and they're just selling down their Microsoft, selling down their Google and their Apple and their Tesla, and they're just moving it over into Meta. So just huge congratulations to the leaderboard
Mhm.
team for riding that wave. Great
Yeah.
job.
Any thoughts on the recent rate of acceleration in the move here, Webby?
Oh, that's a good question. Whenever you look at the rate of acceleration, you always want to look at it on a log chart. So let's switch over there. And
Mhm.
this is an art in doing it. And I actually programmed that in to Pattern Rec. We didn't release it because for all sorts of reasons. But no, to answer your question, that's
Mhm.
not a concern with this line, because it was so shallow, you're
Yeah.
not as concerned about it. It's long enough, and where you draw those points is a whole thing. We could do 3 hours on it, but you really tend to take it out of that. Take that cup with handle at the beginning of this, and take that high point a couple weeks after, right there. Now that would be your first point if you were going to be doing this as an upper channel break. So for those of you who aren't aware, when you have an upper channel break like this, it's a sell signal, but that would be if it was at a steeper
Mhm.
slope. But this is just
Yeah,
saying
it's
that
not
it's
that
kind of
steep.
accelerating that type of move. Earlier, back in December 22, that little flat base that it had, in that rate of ascent, if that would have poked through there,
Yeah.
then that would have been a concern. And anyone who wants to study this, probably go back and look at Amazon in the 2004 timeframe over the weekend. It did
Cool.
something um, like that.
Okay. See what else we've got on here. We'll try to pick up the pace.
Sorry,
Biotech.
you
No,
did
no,
ask
no,
the
no.
question.
I did ask. I'm not. That was not a comment on the past. This is a comment on the current and the future. Okay, so biotech's still overall a weak area. Bitcoin, recent weakness. I do own IBIT, full disclosure. I feel like it is hanging in there though. I'm keeping a very close eye on this low of 53.69. And, for those who are bullish on crypto, I don't think it would take much for this to look actionable for an add-on or maybe a new buy, depending on if you like adding crypto exposure, but it is weakening. So it also wouldn't take much for this to not look good either. Um, and I do think that this is one of those areas that is sort of it's seen by some as a flight to safety. It's seen by others as sort of a risk on type instrument. But when you have ARKK surging while this is lagging, I don't really know, ultimately how that settles out there in terms of that debate here. But that's just a quick thought there on crypto.
Yeah, I would say crypto is very tricky space. I'm, agnostic on the whole. There's people who are anti and pro
Yeah,
crypto.
I'm
I just look at the chart, and for
right.
me, this chart isn't in the right position yet. I would rather buy it somewhere around 60. If it were to move up above the 50 and tighten up over there,
Yeah.
that's where I'd be interested in. Right now, it's just doodling around, and if I was in there, I'd be chopped up. So I'm just going to wait until it's closer to
Mhm.
60, 61 before I
Right.
would try it again.
Yeah, and that's the difference between a successful swing trader like you and a position trader like me. I bought the breakout in November, and I'm trying to add off the 50 and hold and maybe add around that 60 area or a breakout if it can continue higher. But I've got my exit levels there as well. Okay,
And looking for a better nickname for you, or a nickname for
I don't
you,
need a
and
nickname.
I think going back to that is your something about that Jarvis, Nicholas Jarvis, just comes to mind. Your trading style, and if no one if you haven't read Nicholas Jarvis's book, it is one of Bill's favorites, and How I Made 2 Million in the Stock Market, and it's something you could read over a day. In such really about the 1958 bull market that he traded, and really everyone should get that one. Is it one of your favorites?
I haven't read it. I guess I need to read it.
Oh my God. You got your weekend cut out for you, kiddo.
I guess I do. I
You
guess
better
I
order it
do.
today or you're in trouble. I'm going to ask you about it on Tuesday.
Oh, we've got a book report.
Yes.
All right. Jets. Okay, travel. I think that this is really interesting. Would love to, I think this weekend take a closer peek at some of the travel names, but pulling back here, order in an orderly fashion. If we can get some momentum, perhaps a compelling area there. But we know whether it's your cruise lines or your airlines or some of the other hotel stocks, some compelling action in this theme travel.
A little bit of a mixed bag because you had like the Hilton moved up on earnings and Marriott came down and
Mhm.
you know
Yep, they're not
uh
all winners.
yeah, and then you had, UAL, which is my favorite in that space, testing its 50-day this week.
Yeah, see, I
And
like that.
yeah, and then Alaska was holding up so much nicer. So it
Hmm.
is a bit of a mixed bag. So where I was before thinking United was the strongest, these days, Alaska is proving to
It
be the
is.
strongest.
It sure is.
Yep.
Okay, let's see if we have any others. We already talked about ARC, KWeb. So we've got to touch on China here real quick, just due to the recent strength. It's up and out of there. Scott St. Clair on our team on IBD Live was talking about this group. I believe that this was that Monday tariff day. And so with the China stocks coming off lows, that was sort of his opportunity to get in, and China stocks have been moving higher ever since.
Yeah, I've been very leery of them. I did trade this
Me too.
sometime in, September, October, and I think I got caught in one of those gap downs in there. From memory, I think it was David Tepper, who's just a genius, was pounding the table on
Loading up.
China
Mhm.
back during that time frame. And that guy is like hardly ever wrong. So I think if he's still bullish on this, he's probably going to be right. And the thing is, this is a big base that is formed, and it's really a double bottom where today was the breakout, going through the 3483. So even though it's up and out of there, and out of there from where Scott was, buying it off the 21 there, you could say that today is really day one of this breakout because the move that David Tepper was getting, that would have been really impossible unless you're huge like him, who's liquidity probably buys and it sits. He's not going to swing trade things. But with this is a breakout. So I'm going to be looking in this space and probably just do it with KWeb next week. I just didn't. Probably should have just bought it today, frankly. But it was a 3-day weekend, and you just don't know how the news
Mhm.
flow is going to be with
Right.
DC and China. But it looks powerful.
Yeah, definitely. When it goes, it goes. But a lot of risk for gap downs too. So
So
I'm
yeah, even the
yeah.
ETFs can gap down. Like, what is that one gap down? I think it was like 11% or something that I got caught in,
There was a
or 9.
10% and then a 6%.
Yeah, no, there must have been the
It was the
10%
10%
one.
one. Mhm.
And yeah, oh yeah, so at the lows of that day, it was probably down
Right.
11%,
Yeah.
and it was like, wow, with an ETF down 11%. Um,
Yeah, not even leveraged.
yeah, so you're playing with fire, but
Yeah,
it looks like let's go to the
be
monthly on
careful.
this one just to give everyone a sense for when it does have moves, it can have a
Mhm,
sustained move for like a quarter, but then it runs into problems. So this isn't something you're going to want to plant the flag in and stay with
mhm.
forever. But let's go to Baidu on this monthly. And this is one, back in that time frame, really in the '07 time frame is when the move, a lot of us, myself, and I know that Charles Harris and Bill, as well as Jim Ropel, we were all trading, Baidu back then, and so there are times when it does make sense to trade China, and it looks like it might be right now.
All right, we'll have to see. Okay, let's move on and get some quick thoughts on three stocks that are notable right now. Just want to cover this one as an earnings winner from the week. Another enterprise software stock gapping up in a big way on earnings for another quarter here. If you go to the weekly, this week's gain up 36%, and it closed pretty darn close to the top of the trading range. So, and we have triple digit growth. So this checks off a lot of boxes in terms of quality growth leadership, Webby. But what do
Yeah.
we do with
So,
it here?
well, you can't really do anything with it. I do
Right.
have a position in it. We did add it to Swing Trader near the lows yesterday because once it came in, I said, okay, well, this is either going to completely collapse and close the gap, which could, but I didn't think it was going to. I thought it would do something like this, and figured if we're going to buy something with like a 4% maximum stop loss, that's when we had to buy it on the intraday weakness yesterday. So we got away with it, and because we did, we took some of the profits in it today, just because it's not an ideal position. I mean, I think you've had this for some time, and with if you got a huge gain and then you're up 30% on the week, you can let it move around. But if you're buying it on the day that the earnings comes, are out, it makes it very tricky. So let's go back to the daily. And so for this one, I'm really hoping that it tightens up in here and gives us something to trade against. I would even be fine exiting that swing trade position to get back into it with bigger size if it tightens up, and just sometimes I'll just close out the trade and start it fresh again with a new entry. But it obviously looks very powerful, but when you have those wild moves like that, the bears can push them down a lot too. So you do have to be careful, but it's checking every box off. Like, look at those estimates.
I know.
Those estimates are huge.
Yeah.
Huge.
No, I mean, this one now is one that I've messed up a couple of times. I traded it in the November timeframe, got out of it, told myself I was going to get back in right when it was lifting off of the 50-day. That's when I was sick. That's always my excuse, right? I was out sick, but that's when I was adding to Palantir instead of getting back
Oh, it was
into.
the Palantir that I was thinking of, that you're up
Yeah,
1.5%. Okay, that's the one I
yeah.
was thinking.
Yeah, Palantir's my big software winner right now. And so then that was the other thing. I was like, well, I already have the software exposure, but I did get into app on 128. So my profit cushion heading into earnings was like 3.5%. And with the expected move being about 16%, as bullish as I was on the stock and the fundamentals, I decided to not take that earnings risk. So I thought that my risk was gonna, or my luck was gonna run out, because I had a great reaction to Palantir, Spotify, DoorDash. So I was like, I've got to have one earnings loser here, right? So I decided to not take that risk. But I guess you can't catch them all.
Go back 2 days on this for a second.
And yeah, it had a lot of closes off highs. So that I wasn't really like thrilled
You did the
about.
right thing as far as I'm concerned, because you don't want to look at the outcome and then say
Right.
what you did was right or wrong.
Yeah.
That this could have gapped out. Let's pull up GoDaddy,
Right.
for example, which I really like. And that was looking good going into earnings, and look what happened.
Right.
And this looked really good going into earnings. Go back one day,
Mm-hmm.
and you can't tell me that didn't look beautiful. I didn't have it going into earnings because I just didn't want the earnings risk, but that looked like it was going to gap up 20%, but it didn't. And so there's no, never kick yourself for saying, I don't want to step in front of that freight train. I mean,
Yeah.
in Livermore's book, he has that quote about, if you're standing on the railroad tracks and you hear a train coming, you don't look down to see which track you're on and which track it's on. You just get off the tracks completely And that's what you do with earnings, because unless that's your game to just do a shotgun and buy a little bit of all of them go into earnings, um, which I
Mhm.
think makes sense if you have that type of risk tolerance. But if that's not your game, just you did the right thing. So
Yeah.
good job.
Well, I did the wrong thing because I should have been buying it in mid-September, and then my style is to just hold. It held the 50-day. I would have just, I would have really killed it with this one, but obviously I did not. But you learn, right? And with every trade, you learn lessons.
With
So,
with every trade, you should learn, but with every chart that you pull up, you should learn something from. You
yeah.
should, whether you're screening 5 charts a day or 5,000 charts a day,
Mhm.
every time, and I do this on every single chart. Think through and find something on it. Find a 2-bar setup, find an entire base, find something on there, and try to learn something from it. And that's how you
Right.
build up um, your encyclopedia
Yeah,
in your mind. An encyclopedia
exactly.
was a thing that us old fogies used to have.
Yeah. All right. Let's take a quick look at HWM. A lot of strength on Friday. Howmet in the aerospace defense group at 4.2% Friday, above average volume. A really nice upside reversal on Thursday, and then cleared this tight area. This also had earnings this week. So a powerful move here. And this was added to Swing Trader this week, right?
Yeah, we added to it late today, or midday today, and then I bought it after that. Pushing it a little bit, but it was that the earnings were already behind you. What I was concerned with is a lot of the stocks in the group are not looking right. I think
Mhm.
RTX, I think, was one of them that had me just go, wow, do I really want to play in this space? But the HWM was looking so strong that, and most of them looked like the RTX. This was a one standout. And because it was so strong and looking so good. And let's go to the monthly on this one. This has been a monster.
Wow.
Really, just look at that RS line versus its moving averages. I mean, this is a stock most people don't ever talk about or don't ever even think about, but this is a long-term leader that you can also swing trade. So it's just a beautiful thing. You do have the risk of Doge going after anything
Mhm.
in the aerospace and it impacting that, but
Yeah.
that really applies to almost any company these days.
Yeah. And I mean, that's kind of why I like Palantir, because it's AI, it's software, but it's also defense. So this is kind of how I'm playing the defense sector right now. Not to get us too far off track, let's go to Axon, an upside reversal on Friday, up 2.8%, an outside day here. Handle action as well as it carves the right side of the base.
This is what we added it to Swing Trader, and I do have a position in that I bought after that. And it's one of my favorite stocks in our database because let's go to the monthly. Sorry,
Lots
I'm
of
fighting a
lessons.
cold.
No, you're good. I know what
So
that feels like.
I know. I think you gave it to me virtually.
I must
Um,
have.
so you had this huge move back in '03, '04, or the '04 time frame, '03, '04. Everyone should go back and study this one. I mean, that's one of the most important moves in the database, very similar to Bethlehem Steel from 1915. Same type of move, high tide flag on top of high tide flag. Tremendous amount to learn from it. I would go day by day through it. I've done it many times. Maybe I'll do it again this weekend. But so I'm always watching this one. Now let's go back to the daily. Now it's changed. It used to be just tasers. Now it's the video that the police officers wear, which protects them and it protects the people. So it's a win-win, and it's a
Mhm.
win for the company because it's a service now. Instead of just buying a taser and then
Right.
the cartridges that
Software.
they have to replace, it's a
Mhm.
monthly fee that they're doing. So beautiful setup. Earnings, not right around the corner, but that is a concern. A little bit of a concern. 18 days, but I think it looks really good. And then you have the stop of today's low.
Absolutely. Pretty clear cut there. All right, Webby, take it away over to you. Yeah, get your water, get your
I'm sorry.
No, you're
Uh,
good. Do what you
see.
need to do because you're about to do a lot of talking. Take it
Yeah.
away with your charts as soon as you have it queued up.
All right. All right, we are starting with the Bob. We are take a step back, looking at the Nasdaq on the weekly charts, and this was a concern for us last week because you had 3 weeks in a row where your wicks, the top part, were long, and we were saying that that was bothering us. Now this is a perfect candle because this is exactly what we wanted. We wanted a long wick on the bottom with a positive bar. So you can't ask for more than that, and we got it. And the same thing with SPY. I mean, this is exactly what they look like before they break out. So we were always looking at the weekly just to see, is there anything that we're missing? Are we too deep in the woods, in the weeds? And no, that looks good. So we're going to switch over to the regression lines. And again, this regression on SPY broke on December 18th. So we've thrown this out, and we're going to start a new one on January 13th, but we still don't have enough days in there. I can show you what it would,
Trading days, right?
enough trading days. You want, so this is what it would look like if we did it from this point, from the 13th to now. But we need like another week or so to really have enough data in there. But at least the general trend, you can see that it's going in the right direction. Let's look over at the NASDAQ composite, kind of a similar thing. Let's go ahead and throw this regression on there again, starting with the 13th. And going out to today, and you can see it doesn't really make as much sense in here as the SPY one did, but still, we just need a little bit more time. Now we'll toggle over to the 50% retracements. I happen to have RSP up on here, which is the one thing that we're a little bit concerned with, because the RSP is in the upper part of its 50% retracement using the November 29th high and the January 13th low. But really, we want to trading more in this area. Let's look at that QQE that we were looking at before, and you can see that's already up into new high ground. So that wouldn't even need that there. So let's go over to SPY. So SPY is back up at near highs. So that's clearly past its 50% retracement hurdle. And the NASDAQ is doing exactly what we want the RSP to do. It's living up in this top half. Next thing is to get up there. We'll move over to the levels, going as quickly as I can today. So again, I've cleaned this up quite a bit. We still have our ultimate green line at our old highs that we hit back on December 16th. We had this high on January 31st that we were able to penetrate through today and close above it. So that's good. On the downside, we have a couple areas that we are concerned with. One is the day before the follow through that we didn't need. So the January 16th low, that's your 19,335 level. That's probably one of the most important levels on this chart. And then the low, there's a bunch of ones on here that I could have drawn, but I'm trying to clean this up. And so the low from the 3rd, February 3rd, is another key level. And of course, we don't want it to go under the January 13th low. Let's go over to SPY. SPY is looking beautiful at highs. Our first level that we would be concerned with would be the low from Wednesday. And then your next one would be, again, the low from January 16th, the day before the follow through day. And then you can see, down here, the January 13th low, and then we will round it up with our very basic streamlined, just the 21-day on there, just the facts, and our low is back above that on NASDAQ, low is above it on SPY, low is above it on Qs, low is above it on RSP, but didn't close up on the day, and so it's looking good there. So I'm going to stop sharing. Let's see. Now I will share my other one. Am I getting a little faster with this stuff?
Yeah, you're doing great. Great
All
job.
right. So let's start with the Webby RSI, and we will look at the NASDAQ first. Again, this is the distance from the low versus the 21-day exponential expressed in ATRs. down here in the bottom with your little blue histogram. And you can see that it's finally poked up there. It's about 0.8 or so ATRs up there. So we want that to build. We want it to be a wall of blue like we had back here in May of last year, or back over there in November of 23. So we're just getting started there, hopefully just getting started. SPY, we've had this choppiness where you see a little blue histogram, then it goes away. See a blue histogram, then it goes away. And that's just a sign that your low hasn't been able to stay above your 21 days. So we want a wall of blue, which means our low has to stay above the 21 day. So that's our next hurdle there. And we will wrap this up by looking at the Bob Marley indicator. And this is just measuring your off high in terms of ATRs. So SPY is pretty much near its high, so we don't have to worry about that. Let's look at Qs, same thing there. Let's look at the RSP, because that's the one that's the problem child. And we really want this to break this level here. So like 3.3 ATRs is where we want it to get above, which coincides with this area up there. And I think that's all she wrote.
All right. Awesome stuff. Any final words in closing as we prepare for a long weekend and another week of trading ahead?
Yeah, all these 3-day weekends, really get me upset. I'm going to bring this up every 3-day weekend until New York Stock Exchange does something. And I'm not joking around. We have a lot of veterans, my father included, who sacrifice a lot for our country. And we don't have Veterans Day off, but we have all these other days off. Keep all the other days, add more, but have Veterans Day off. It's completely ridiculous. And the New York Stock Exchange could change that in a day. And I hope that they do. And enjoy your weekend.
Maybe they will change it. You never know.
I hope so. Look, you've got to plant a flag on certain things and really stand by them. And this is very important. So, but as far as fun things to do a lot of homework over the weekend. I do have a little channel out on YouTube. I put some videos out and people said, hey, it's a lot more fun to watch them on my TV on YouTube. So they're a great sleep aid. 9 out of 10 doctors recommend it.
Did you know that more people watch YouTube on their TVs now than on their phone?
I do. I watch YouTube all the time. Andrew Huberman has a great podcast on health that I watch all the time, and I'm on YouTube all the time. So, anyways, it's Webby 5150 is the channel, and I'll probably do. Last weekend I did how to use MarketSmith, how I use MarketSmith,
Market Surge.
Market Surge. That's a tough one. It took me so long to get past Daily Graphs Online was MarketSmith, and then I finally got used to that.
Been around so long, it just
Yeah, the horse and buggies out front, or and then I did how and why I built the Market Surge Growth 250 and how to use it. And so a couple videos on that in model book stock. So I think people will like it, and I get to ramble on. So it's fun for me.
Yeah. And I've seen a lot of comments with great feedback. So I think that's really cool that you're doing that, Webby. All right. Well, thank you all so much for watching. And we will see you back here next Friday for another episode of our Friday Stock Market Today. And we'll see you on Tuesday in the morning, starting with IBD Live, investors.com/IBD Live for all the details on that. And then we'll see you back here Tuesday after the close.